I want to start sort of very high level. You and I sat in Miami a couple of years ago. We talked about Trump. At that point, president was kind of a ridiculous prefix, but it happened. Yeah. You said he would be good for business. Do you still think that's the case?
Yes, I do. I mean, for all the noise and, without getting into the politics of everything, you can't criticize the outcomes. The outcomes have been pretty good.
Well, so what's changed? There's been obviously a corporate tax rate change, but apart from that, has as much gotten done as you would have thought, given that all three chambers are in one party's hands now?
I think in some ways for business, probably more than I would have thought. I mean, I actually was a bit sceptical that they'd get tax reform through. I think that it was much needed. I think it's very interesting because at the end of the day, American corporations were really, becoming uncompetitive. And all of these companies that were moving offshore, actions, speak a lot about in the environment. And I think today, corporations are comfortable being in the US. Over time, they will pay more revenue. It's a win-win. And I think that he's been good for that environment. But it also creates a wider environment. I mean, it's not just about taxes. It's a business-friendly environment that we're in. And I think that's showing in the market and how the economy's performing.
So one area where they seem to be going in a very business-friendly direction is loosening the leverage lending guidelines. A lot has been made of that. Are you already in conversations with the big banks about how they'll respond to this, whether or not they'll give more, I suppose, more favourable terms?
Look, I think banks will say publicly that nothing's changed and everything's going to stay conservative. But the reality is they're licking their chops because there's a great opportunity to do more in an environment where interest rates are still pretty low. And I think you'll see, certain borrowers going back to leverage levels that they wouldn't have been able to do and buyouts being done at leverage levels that private equity firms wouldn't have been able to do just a year ago. Probably good for the banks. If the economy continues to be strong, it can provide good returns. But I'm somewhat leverage fearful. And so I think it's all in the balance. But you'll find fringe companies inevitably will get caught out when the tide turns.
So the banks are pitching on this stuff already?
Oh, no question about it. No question about it. Look, prices are higher, and if you're going to compete for transactions, at the end of the day, it's going to drive multiples higher. And you're doing that at a time when you have, I don't know if it's peak earnings, but certainly very strong cyclical earnings.
Martin, I want to bring you back to politics quickly because you're a British accent. You're also a man who knows plenty about endurance with all your running. Talk to me about the endurance marathon that is Brexit and how you deal with that when you've got exposure via Nomad. How do you see the geopolitical ramifications hitting that business, if at all?
I wouldn't say not at all. I would say that I'm actually, if you like, bullish on Britain. I live in America. I've lived in America for a very long time. But I think that when all is said and done, I think England is going to end up, or Britain is going to end up being where it was when I was a kid living in England, in a common market where you had an economic alliance between Europe and Britain that existed out of need. There's no mutually assured destruction that it's a win-win for anybody here. I think after all the noise is over with, Britain's going to be just fine. It's going to do an enormous amount of trading with mainland Europe. It'll continue to have its alliances because there's economic necessity. Britain is a huge economy. Europe needs it. And there's a lot of trade there. And, once all the noise is over and the politics is over, I think you said earlier, what's it, the glorious pound? What did they say about the pound? I'm still bullish on the pound.
Mm-hmm.
All right, so moving away from endurance sports, I want to go to Newell, which you just walked. That was more like a sort of a barroom brawl, right? Or that's how it looked from the outside. So you just walked away from the situation. You were essentially trying to take control of the company because you had a fundamentally different belief to other directors there about how it should go. You wanted to kind of keep it together. They wanted to break it up. Take us inside that situation. How bad did it get?
Well, first of all, I want to emphasize two things. One is I'm no longer a shareholder of Newell. I'm not on the board of Newell. That entire episode is in my past. So I look at this purely, from an objective point of view at this point. I do have a lot of emotional allegiance to the employees at the company who, particularly the Jarden employees who I worked with for a very long period of time. It's a bit of a sad situation. I'm not sure there are any winners in the scenario as it came out. I do believe that in activism, if you're going to be an activist, you have to have a strategy. And I'm not sure that the activism, I think Starboard had a strategy, but they weren't able to execute it, which is why I allied with them.
Do you blame Starboard for caving?
No, I don't blame Starboard for anything. I think, in a way, I put Starboard in a difficult situation, which was unintended, but they understood that that was my position. I wasn't going to get into a tussle with Carl Icahn. I said it before it was in the public domain, and I've said it after it was in the public domain. I just don't do, it's not my, life is too short for me to get in the middle of tussles between activists. I've said this publicly before. Having said that, it's about strategy for the company. And you can wheel and deal, but if you can't operate...
Starboard did a complete 180 on the strategy, right? The strategy was to keep the company together, and suddenly now it's to break it apart. We've already seen it.
In fairness, they didn't have a choice. The deal that the company cut with Carl Icahn really eliminated the scenario where they would have been able to execute on that plan. So, not to get too much in the weeds of it, I think they did what was right for them and their LPs, and I don't blame them for that strategy at all.
Have you seen a situation like this? Because it seems so unusual to an outsider that you now have two activists in the stock, both who went in quite aggressively. Nothing has really changed. No one has lost their job. No one has even been apparently threatened with losing their job. So to what end are they both there?
I'm not there today, so I can't tell you. What I can tell you is the only way shareholders will make money in that stock is if there are operational improvements in the business, and you can't wheel and deal your way out of that one.
Ed brings up a serious point, though, right? Because we are seeing activists band together. It feels like a lot more often now they're jumping in on each other's territory. They're doing deals together. Is that because it's so difficult to, change a company when the likes of a BlackRock or a Vanguard has 5% of the company anyway, and their vote is really all that matters, one of the bigger shareholders? Look,
I think activism is difficult, particularly when prices are high, because it's hard to criticize a company that's trading at 12 or 13 times EBITDA and telling them that they're not, had a great run, and telling them that they haven't done a great job. I think that activists are now beginning to play dual roles. I mean, I look at things like Dan Loeb, who's a great investor, who doesn't just do activist investing. He takes solid long-only positions, knowing that it's a buoyant market, so he's protecting his downside while creating some focus on a particular stock on the upside. There are over 5,000 stocks to buy. Why buy one particular stock? And I think that what activists have the ability to do is shine a light on a situation that may be out of sync for some period of time, and create value that way. But I'm not sure that there are companies out there where the whole is worth more than the sum of the parts in today's environment.
I want to move on to the activists and to another one of your company's platform in a second, but I just have one more question in regards to Newell. So, Jarden, you built up over a period of time into a very successful company, obviously sold that to Newell, and that was how you became involved with the company. Do you look back at that and have any regrets, bearing in mind how Newell has performed since, and quite a lot of Jarden shareholders took Newell paper in the deal?
Yeah. Look, hindsight's 20/20, so we all have learnings our whole careers. We'd spent 15 years building Jarden. I think we created, 5,500%, something like a 34% compound return for 15 years. It was a great run. It was a great company. I think the learning for me, if anything, was if I'm going to do a deal where we take a lot of paper, it'll be, if I did another one, it would be where I had a lot of influence after taking a lot of paper. I think the situation we got into with Newell, with hindsight, was, our shareholders owned a lot of the company, but we didn't have enough say in direction. And had I not had, with hindsight, I probably would have taken more cash, less paper if I had the choice.
What about conglomerates in general? United Technologies is obviously another one now where activists are looking to break it up. Yeah. You say Newell should have stayed together. What about UTX?
It's different in the sense that United Technologies is divided into 3 or 4, very large components. Big pieces. They can be standalone public companies. Some of them have real strategic interests to other large companies. Newell's a different story because it's a conglomeration of very small brands. I mean, the definition of what we did at Jarden was, market-leading brands in niche markets. So everything by definition was small. They're not standalone entities anyway. So I'm not sure that you can do the same kind of strategy. Whereas with United Technologies, you can create efficiencies. I mean, you saw the same thing going on with DuPont and Dow. You know, there are those opportunities. If they went back to the old step-up rules from the 1980s, there'd be a lot more deconglomeration going on. But it's difficult to do because of the tax inefficiencies.
Let's move on to Platform. So Platform, the chemicals company that you own, another fairly large public company. There was a story last year, and I think we wrote a story last year saying that potentially that was going to be broken up and that you were looking at selling half of the company. Is that something that's likely to happen? Are you going to return to that, or is this just sort of business as normal now?
So what we've said publicly and we're going to do is we're going to separate the two businesses. I mean, I think one of the learnings in the Platform journey is we bought great businesses. The ag business is a great business. The what we call our specialty solutions business, if you like, is a great business as well. But investors don't have an appetite for both. You know, we focused on asset like high touch as being a class, whereas the reality is people want to buy ag, people want to buy industrial. People tend not to want to buy both, and so we're going to separate the two businesses. How we go about that is something that we'll bring to the public at the appropriate time.
And another company that you're very busy with at the moment is J2, which is the business that you essentially launched with the former Jarden management. It's your SPAC, what is this, sort of $1.2 billion, $1.3 billion?
About $1.25 billion, yes.
Right, so I imagine you're out looking at a ton of targets. Can you give us any sense of what we're likely to see regards to M&A there?
Yeah, I mean, for Ian, Jim and I, Ian Ashkin, Jim Lilly and I, we built Jarden up. We're looking for the same kind of platform where we can build a business. You know, I've done a lot of these vehicles, as you know. I think deployed about $8 billion of equity over the last 10 years. And in this vehicle, this is what we hope. We call it J2 for a reason. We're looking for the types of businesses where we can take our experience and put it to good use. So that would be businesses that are in fragmented sectors where there are opportunities for follow-on acquisitions, where there's operating leverage to a particular niche market. So we're looking at things like packaging companies, things that are, if you like, consumer, not necessarily consumer-facing, but producing goods for that end up in consumers' hands.
What about the International Paper and Smurfit? Is that the type of company you're looking at?
Smurfit had a great run for a very long time. A very good Irish entrepreneur. Yeah, I mean, that's more my father's era. My father and Jimmy Goldsmith bought paper and packaging conglomerates over the years in the 1980s. I'm not sure if those particular opportunities still exist, but
yes.
but that kind of ilk, yes.
Okay, Caroline.
Martin, what about frozen food? We very thankfully had the CEO of Nomad, of course, which you oversee, the CEO Stefan, on talking about opportunities of acquisitions. Where do you go next with Nomad in terms of the UK? Is that still an acquisition-rich country, as you've just done a deal here once again in the area of frozen food?
So yeah, we just bought Aunt Bessie's, and I know you had Stefan Schumacher on talking about that. We're very excited about it. It's a perfect fit. If you go down the aisle at Sainsbury's or Tesco's, what you'll see is Goodfellas Pizza sitting next to Aunt Bessie's, Yorkshire pudding sitting next to Bird's Eye fish fingers, which is sort of nirvana for us. There are similar opportunities for tuck-ins in other mainland countries in Europe. So we're still Europe-focused. If we find the right opportunity in the US, we'd welcome it. We've been looking. Again, it's all about value. But look, for us, Nomad's on a growth trajectory. Frozen seems to be coming back into fashion, as it should, because of the qualities of the product are superb and have really been underappreciated, I think, for quite a long period of time. So, yeah, we're still on the hunt. Business is doing very well. Stefan's doing a great job. He's built a great team. And look, businesses are just about people. And I think the best thing that's happened over the last 2 years as we've turned Nomad into a grower is the team that Stefan has put together.
I want to talk, and we can end on this if you like, about the buying environment generally. There is about $2 trillion of dry powder sat in private equity at the moment. There is seemingly like huge strategic competition for almost any asset that comes to market. How do you, across your companies, assess that market? Because it seems like it's so competitive. How do you stay disciplined but also find deals?
So what you said is exactly right. You have to stay disciplined. You can't, get impatient. It's a long game, and I think there are times to do nothing. So if you can't find big things that because the overall is overvalued, you try to find small things in niches where you can find value. I've been making acquisitions for 25 years in the public company environment, and I've seen high markets and low markets. The reality is the best merchandise comes to market in a strong equity environment. And I'd rather buy a high-quality company for a relatively high price than buy a low-quality company for a good price. So there's a bandwidth there of being sensible, but you tend to be able to buy companies in this kind of environment.